Okay, everyone, let's talk about how you can use tax credit transfer to sell commercial deals and drive your commercial development process forward. The big question we get coming out of the legislation this summer is impact on the tax credit transfer market. So to highlight right off the bat, we have absolute policy clarity. That means clarity on the tax credit, clarity on the adders, and clarity on transferability. So that's all been a positive factor driving the market, which means we have a very strong market for tax credit transfer right now. And that will extend into 2026, we expect, barring larger economic and market factors. What will happen at some point is that we will have increased volume, which will have a reverse impact and start to soften prices, as well as the cost of tax credit insurance. So overall, that drives to one of the things we always want to do in the development stage is drive customer timing and catalysts for action. So we have plenty of time to finish projects. We have a quite long development timeline, but we can still finish project. That part's good. Tax credit market is strong now and the economy is strong. We always have the potential for market changes based on economic conditions. So drive the deal timing forward. It also gives you an opportunity to showcase your expertise. Most contractors and developers in the commercial market at this point, in the megawatt and under scale especially, are not fluent in tax credit transfer. So by bringing this topic to the table, you're going to demonstrate expertise and a team right there that a lot of your competitors won't bring to the table. I'd also highlight it's a good time for your customer to understand the terms and specifically how recapture works if they're not already familiar with that. Because recapture terms are really the key point we have to work through with a lot of our larger corporate and REIT customers in tax credit transfer deals. So you use these, gives your client comfort to move forward with the project. We'll highlight that when you get into construction, you want to do a couple key things. You then want to take that timing baton to keep your deal on track. You also want to take advantage of that time to be preparing a solid data room. And we can talk directly about what that means. You know, there's a lot of insight we have from what buyers and what buyers counsel and insurers look for very late in the process, that it's good to be planning ahead. We see, for example, a lot of PTO letters from utilities that have mistakes in them. Some of those mistakes don't matter. Some of those mistakes can be material. So getting a good solid data room cleaned up is important so that when we hit completion, we're prepared to do several key things. The first is you can't file your IRS credit registration until you have PTO. So we'll work with your client to get that started as quickly as possible. That might take 4 to 8 weeks. Once we have that done, then we'll also initiate your client on what's called the cost seg analysis or cost seg report, which is what buyers and insurers use to validate tax credit basis. So we'll get that going, and then simultaneously we'll be in the market getting terms from buyers so that we'll have cost seg report and terms in hand, most likely by the time you get your IRS credit registration back, so that with that package, your client will be prepared to sell the credit as rapidly as possible and maximizing value. So by all means, give us a call if we can talk through any of those, but that equips you to answer a lot of the early stage questions and just bring up tax credit transfer early in the process if it helps your development work.